1. Register for self-assessment. You must register with HMRC if you're required to submit a self-assessment tax return. Who needs to register? You are self-employed or a sole trader. You earned income that hasn't been taxed, e.g., freelance work, side jobs, or rental income. You made over £100,000 in a year. You need to report additional income such as dividends, savings, or capital gains. You're a partner in a business partnership. You earned over £1,000 in self-employed income in the tax year. How to register? Go to the HMRC website, register for self-assessment. Choose the appropriate option. Register as self-employed. Register as a partner in a partnership. Register as a taxpayer with untaxed income, e.g., rental income. HMRC will send you a Unique Taxpayer Reference, UTR, number. This 10-digit number is essential for filing your return. It can take up to 10 working days to arrive, or 21 days if you're abroad. Once you have your UTR, create a Government Gateway account to access HMRC online services. 2. Gather your information. Before you start, gather all the records and documents you need. Personal details. Your Unique Taxpayer Reference, UTR. Your National Insurance, NI, number. Government Gateway ID and password. Income information. Self-employed income details, e.g., total invoices issued or payments received. Employment income, e.g., P60, P45, or payslips. Rental income, from properties you let out. Bank statements showing interest from savings accounts. Dividend vouchers for income from shares. Foreign income, if applicable. Expenses and deductions. You'll need records of any allowable expenses, costs that you can deduct from your income. These can include self-employed business costs, office expenses, stationery, printer ink, phone, or computer costs, travel expenses, mileage, fuel, train tickets, etc. Staff wages, if you employ someone. Business insurance. Marketing costs, e.g., website fees, advertising. Property rental costs. Maintenance, repairs, letting agent fees, and mortgage interest. Other deductible items. Pension contributions. Charitable donations via gift aid. Tax already paid. Details of any tax deducted at source, e.g., from pay employment. Payments on account made to HMRC in the previous year. 3. Log into HMRC's online service. Once you have everything ready, you'll need to log into your online account. Visit HMRC's online service. Use your Government Gateway ID and password to log in. Select Self-Assessment and start the process. 4. Complete the Self-Assessment Tax Return. The main form for filing your tax return is the SA-100. You may need additional supplementary forms depending on your income types. Main form, SA-100. This form covers personal details, name, address, UTR, and NI number. Employment income, use your P60 or P45 or payslips. Income from pensions or state benefits. Other income, interest, dividends, or foreign income. Supplementary forms. SA-103 for self-employed income. SA-105 for rental income from properties. SA-102 for employment income if you had multiple jobs. SA-108 for capital gains, e.g., selling shares or property. SA-101 for other income, such as investments or trusts. Step-by-step process for completing your tax return. Enter personal details, confirm your information is correct. Declare your income. Enter your total earnings from all sources, employment, self-employment, rentals, etc. Report expenses. Input allowable expenses to reduce your taxable income. Adjustments and deductions. Include any payments like pension contributions, student loan repayments, or charitable donations. Review and verify. Check all figures and ensure they match your records. HMRC will prompt you if anything seems incorrect. Submit your return. Once you're satisfied, submit the return online. 5. Pay your tax bill. After submitting your self-assessment, HMRC will calculate the tax you owe. The amount is based on your total income, deductions and allowable expenses, any tax already paid, like pay deductions. Payment deadlines. The 31st of January, deadline for submitting your tax return for the previous tax year. Paying any tax owed. The 31st of July, deadline for payment on account, advance payments towards next year's tax. How to pay. You can pay your tax bill using online banking, bank transfer, debit or credit card, direct debit if you set it up in advance, at your bank or building society, check sent by post. 6. Avoid penalties. It's essential to meet deadlines and ensure your information is accurate to avoid penalties. Penalties for late filing. Missed the 31st of January deadline, automatic £100 fine. 3 months late, £10 per day penalty, up to £900. 6 months late, additional £300 or 5% of the tax owed, whichever is higher. 12 months late, a further £300 or 5% of the tax owed. Penalties for late payment. 5% of the tax due if unpaid after 30 days, 6 months, and 12 months. HMRC also charges interest on overdue amounts. 7. Additional tips. File early, don't wait until the last minute. Filing early helps you avoid stress and spot any errors. Keep records, maintain records of income, receipts, and invoices for at least 6 years. Use accounting software, tools like QuickBooks, Xero, or FreeAgent can help simplify the process. Seek professional help. If your finances are complex, consider hiring an accountant to assist you. Important links.